Hello and welcome to another update video about ADA. The drama continues here in this sideways range. I mean, you could argue that we really have been in this range since the 21st of November now, so it's getting really boring. No movement above 33 cents since then, and it continues to go up and down in this region. There is, of course, a bullish count and a bearish count because we've made a new low. That was anticipated around the 30-cent mark, so we hit target. Whenever in the current larger context we make a new low, we need to be watching. We need to be watching for lows. Yeah, we need to be watching if an impulse is created and if the trend could be changing. If the trend is changing and the market jumps 10%, 15%, a lot of people will panic. I can only encourage you not to panic because, let's be honest, Bitcoin and other cryptos aren't going to go to new all-time highs from here straight without any significant retracements. There will always be another trade. There will always be another entry opportunity. I'm rather a fan of waiting for confirmation because we have dropped down so much and we've had so many fake out rallies that we really need to be careful. I mean, the best confirmation is that you can get that a low has indeed been made is a 5-wave move up, a 3-wave move down, an impulse to the upside, a correction to the downside, which we have here. Yeah, we have 5 waves to the upside and 3 waves down. So you will ask, why is my expectation still another low? Because that is my primary expectation. There is a bullish scenario from here because the market can certainly rally from here. We've pulled back a lot into support, and we have some possible signs that we could be rallying. But it's not high confidence. But exactly because of that, there is a bullish count, because you need to be aware what the market would need to do to fulfill a breakout scenario. Primary expectation is still to the downside. And why is it? Even though we have 5 waves up, 3 waves down, because the move to the upside here can be at best, in the best case, I would count this as a so-called leading diagonal. These are very unreliable patterns. They could easily be counted as an ABC as well, or WXY, so a corrective pattern. And in this move to the downside, we came down a little bit too low. We did not invalidate the bullish count, but normally in any retracement of a wave 2, you want to avoid going below the 78.6% fib level. Now, okay, we didn't really break it. We broke it only briefly. We came down to the 88.7% fib level. However, we came still down to basically the maximum we should do. And combined with a leading diagonal and then a more than ideal retracement for a wave 2, it just doesn't give a lot of confidence. I hope that makes sense. I mean, I'm repeating myself in these videos because I know a lot of people are waiting for daily ADA updates, but I can't really tell you anymore. The scenario for me is still one more low. Now, I could be wrong. ADA could make a new high from here, and that's fine. But at least if it does do that, if it does make a new high, and if we create this 5-wave structure, at least that would be a proper signal that things are changing here. Yeah, we need those 5. If we have a leading diagonal and a very strong retracement in a wave 2, I'd rather want to see those 5 waves complete here of the higher degree to get confidence that the trend has changed, and then there's no reason to FOMO or panic. It's just a matter of waiting for the ABC correction which follows. And if this ABC correction becomes an impulse and makes a new low, then it's great, because then the test of a bullish count failed and we're making a new low. So there's no reason to FOMO. And even if the test is successful, so we make these 5 waves to the upside, come down in 3 waves, then this would provide another usually more attractive entry point, because let's say the market suddenly rallies to 38, 39, 40 cents. Do I need to get FOMO? No, because usually then that is exactly when you get your ABC correction. And a lot of people who bought the top then will sell at the bottom. And then when we've got this larger 1-2 setup in the wave 3, a lot of people will jump onto the FOMO train because they got faked out, because they sold at the top. They bought at the top. They sold down here, and that is when the market starts to move, and that's the third wave, the FOMO wave, when a lot of people then get panic and really jump onto the train again. The situation here continues to be difficult. The bullish count is certainly possible. I showed you the detailed count here for the bulls. The wave 1 to the upside, here the wave 2 down in a WXY pattern. That's certainly possible. And then we could say, okay, yesterday due to CPI we had quite a strong jump. As suggested yesterday, this would have to be the low of the wave 2, which we marked here on Tuesday. Because if it is not the low of the wave 2, then it's probably going to fail straight away and we get into a direct sell-off. We then came down in what I would believe now is ABC, yeah, hit wave 2 support, and we could now be moving up in wave 3. As per the bullish count, again, not high confidence, but to give us some evidence that wave 3 has started here, we would need to break above the B wave high. That's the first evidence, 31.5 cents, and then the break of the wave 1 will give us further evidence, 31.9 cents. Then we could certainly rally to that 32.8 cent resistance and would ideally need to push higher, because the ideal target for this third wave would be 33.8 cents. That would be ideal, and then we can take it from there. And in the next step, we would then have to break out of the channel. And then we can be a bit more confident in a bullish count, because at the moment, for me, the bearish count is still primary. And the bearish count would look like this: a wave 1 to the downside here to the low of the 22nd of November. Then we retraced in 3 waves in a wave 2, and we're now in this third wave to the downside into a target range around 27 cents. Then there should be a 4 and a 5. Within this wave 3, we've got subwaves. So my understanding at the moment would be that we, let me just do that, that we moved down in a wave 1 of 3. We retraced, possibly are still retracing here in a wave 2. Then there should be a 3, 4, 5, and maybe we'll even go down lower than 27 cents. That depends on how much we really retrace. But in terms of retracements for the wave 2, we would ideally expect the price to retrace into the current region between the 61.8% fib level and the 78.6 fib level. That is going all the way up to 32.3 cents. It should not go above that. If it goes above 32.3 cents, that would already make my assumption, the bearish count, a little bit less likely, because it retraces a little bit too much. So yeah, we continue to be in this sort of difficult situation. Nothing that I would think is very tradable. We don't have a very clear setup. We have 2 counts. They are both not high confidence, because the market is at the moment just trolling sideways. So we just need to wait for the first proper impulse to give us a clear direction here. But I'll keep you updated, of course, about the latest developments. So I hope you liked the update about ADA. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.